Hey guys, it's Shane Walter, and back to record week 6 videos, and we're on chapter 6, case 1. We just finished chapter 5, case 3. So the first thing we're going to do is we're going to change our name, and we're going to click on it, and we're going to change it to case 1, student's name, and save. Once we have that saved, we can exit out of that company information. And we're on number 1. So number 1 says create 3 new fixed asset accounts, category type, fixed assets, detail type, machine and equipment, and accumulated depreciation where appropriate. Account names equipment, original cost is a sub-account of equipment, and accumulated depreciation a sub-account of equipment. And then it says create a new asset account with category type, other assets, detail type, other long-term assets, name investments. So to create these, what I'm going to do is I'm going to go to accounting, chart of accounts. The first one is fixed asset, machinery and equipment. Fixed asset, machinery and equipment. I'm going to go to new. I'm going to go to account type, fixed asset, detail type. I'm going to look for machinery and equipment. Machinery and equipment. Now, I believe I already have one of these machinery and equipments from a different case. So I'm going to bet, I'm going to put on here case 1. I believe it's in case 2 that I already have machinery and equipment. I want to track this, but it doesn't tell me that I have any initial costs or anything else like that yet. So I'm not going to put anything in there for this. I'm going to hit save, and I bet it's going to tell me I already have something named that. Yes. So I'm going to type this machinery and equipment. I'm going to call this case 1. Case 01, case 1. I don't remember what I did in the past. Let's hope I use case 01. Yeah, I'm going to leave it like that. Machinery and equipment, case 1. I'm going to save. So if I look back at this account, machinery and equipment, case 1. Let's scroll down. Here's machinery and equipment without a case number on it. So this must be case 2, because here's case 3. And I did not put a 0 on there for cases. So what I'm going to do is I'm going to edit this real quick. And I'm going to change the 0 to just a 1. I like to stay consistent with how I name things. So now I'm back. And so this one, you find it. Oh, machinery and equipment. This is actually case 2. This is case 3, and this is case 1. So I can identify these better. I'm going to go back to this one that is not named as a case, and I'm going to name it. If I can type, case 2. Save and close. So now I should have case 1, case 3, and case 2. 2, 3, and 1. All right. So now I have that taken care of. Let's see what number 2 says. Number 2 says, create a new asset account with a category type of other assets. So I'm going to go to the top, new. Asset or account type is other assets. And the category type is, or the detail type is other long-term assets. Other long-term assets. And the name is going to be investments. And it does not tell me that I have a balance in here. So I'm going to leave this blank. And I'm going to click save and close. I'm just creating the account now because I'm going to use it in the future. And then number 3 says record the purchase of a new computer on 1/10/18 from Office Depot. Check number 1003, amount for $13.75, account is equipment and original cost. So if I'm going to record the purchase of a new computer with a check, so if I purchased it using a check, I'm going to go to create. I'm going to do check because I paid with a check. I'm going to choose my payee, which is Office Depot, it says. I find Office Depot as my vendor. And the check number is 1003. We'll go ahead. It's already there at 1003. The amount is different. It's bringing this up because this is what I did. Get that off there so it does not do that again. It brings up this because this is the last transaction and it's trying to make things convenient for us. But the date's changed. The date is 1/10 of 18. The account is going to be equipment original cost. See if I have that equipment original cost. I don't know that I do. Now, this might be machinery and equipment original cost. And they just left that off. And it is. Why would we create it if we weren't going to use it, right? So I'm going to go find my machinery and equipment for case 1. Right here's machinery and equipment for case 1. And we have depreciation and original cost. I'm selecting the account original cost. I'm changing this amount to 1375. And I should be done. So I'm going to record this purchase on 1/10 of 2018 using checking account 1, right, because I'm in case 1, to Office Depot for machinery and equipment, original cost, in the amount of $13.75. I got check number 1003, and I can save and new. There it goes. It saved it. So now I'm on to number 4. Number 4 says record a long-term investment on 1/11/18 to E-Trade, a new vendor, check number 1004 in the amount of $4,000. 2 investments. So the first thing I need to do is I'm in the checkbook. I'm at check 1004, so I'm already good there. But I need to change the date to 1/11/18. So I'm going to change the date first. Still using checking account 1. The payee is a new vendor. I click new and I'm going to type in E-Trade. It's vendor and say, oops, I changed it to trade. Don't like that. It should be E-Trade. I don't think it's going to let me edit that. I'm going to have to go back and edit the name after I'm done with the transaction. So I got trade set up. So there is something wrong with autocorrect. It gets in the way. The account type is going to be investments. So I'm going to click on the drop-down menu. We'll look for investment. It's going to fall under other. And I must have investments right there, other assets. Investments, and it's for $4,000. All right, right check number, right checking account, right account, wrong name, correct payment date, correct account, and the correct amount. I'm good to save and new. Number 5 says record the sale of a common stock on 1/12/2018 to shareholders and new vendor. Name deposit amount $20,000. The account is common stock. So I'm going to record the sale. Now before I record that sale, I'm done with this checkbook right now. I want to go in and I want to change my chart of accounts for trading to E-Trade. So I'm going to go down and look for it. Too bad it's not in alphabetical order. There's a transaction for $4,000. Nope. All right, so I can't find it here. This is the chart of accounts. I know what I was thinking. It's going to be a vendor. So if I go to expenses and vendors, there's where I want to find it. Trade. I'm going to go here to don't have an edit on it, so I'm going to click on it and then edit. Click and then I edit. I'm going to change the company name to E-Trade. Display name is E-Trade. And then save. Spelled that right? Yeah. All right, so it changed all of my transactions that have this vendor. All right, so I'm on number 5. It says record the sale of common stock. So if I'm going to sell common stock, what am I going to do? Well, there's a couple of things to do. Just like some of these other things, like we could have created the accounts in the journal and stuff like that, if they would have had a balance, but they don't. To record a long-term investment like common stock, it's going to be a sale. So we don't want to do a sales receipt. I mean, we probably could do a sales receipt because we are selling something, but we're not going to have a product. So we would have to select an account if we did a sales receipt. If we receive payment, that might work, right? Let's click on it and see. That might be the best way of doing it. Payment method is going to be a check. It doesn't tell us that we received a check. It says that we received a common stock deposit of $20,000. It's going to be deposited into undeposited funds. So that's probably not going to be the best way to do it. Let's just go do a bank deposit. So here we are in a bank deposit, and it has my last deposit created in case I want to do it again. It was for case 2 checking account, or case 2 because it was checking account 2, and the date's there. I'm going to change this to checking account 1 because we're in case 1. The date, it doesn't tell me what the date is, does it? Yep, 1/12 of 18. So I want to change this to 1/12 of 18. And because the way our deposits are set up in QuickBooks, we can either take deposits from payments we've already taken that's been undeposited yet, or we can add funds to the deposit. So here what we're going to do is add funds from the deposit. And to do that, we're going to click on, we got the date, the date and the right account. So we're going to click on receive from, and it's going to tell us it's received from shareholders. It's a new vendor. So it's going to be on here. We're going to add new, and it's going to be shareholders. And it's going to be a vendor and save. And the account that's going to be affected is common stock. Yes, common stock. So we're going to click on this, and we're going to look for common stock. And it's going to be an equity account. So I'm looking on the right-hand side for equity. Here we go. Common stock. This is case 1, case 2. So it's common stock for case 1. The payment method, it doesn't tell us. They just tell us that it's $20,000. So the amount we're going to do is $20,000. $20,000 for this deposit. Accounts common stock received from shareholders. This is going to be the best way for us to record that, just because our deposit lets us take or add additional funds to it that was not taken on a bill that we had issued or an invoice that we had issued. I'm going to click Save Anew, and that just went to the bank for $20,000. So what else we got? Number 7 says record the payment of dividends to shareholders on 1/15 of 18. Check 1005 in the amount of $500. So again, it's telling us that it's a check. So we're going to go to Create, Check, and the payee is shareholders, should be. Shareholders, yep, shareholders. Checking account 1 is selected. The account is dividends. I wonder if that's an account that we made or if it's one we're going to find there or have to make. It doesn't say to make one. You wouldn't think that you would need to make one because it doesn't say it. And it does not have one. Record the payment of dividends to shareholders on 1/15/18. That's crazy. All right, so we're going to add, and it is going to be a expense. See if we can find it in expenses. Bad debt, dues and subscriptions. These are in alphabetical order, so I don't think I'm going to find it there. So it's not in expenses. Let's see if it's in other expenses. Depreciation, nope. All right. Let's look in equity. preferred stock, treasury stock, partner distributions. Now, distributions for a partner is the right terminology. I mean, the right kind of account, but it's not what we're looking for. We're looking for paid a dividends, and we might need to select that one and change it to dividends. Long-term liabilities shouldn't be here. Shareholder notes payable. I don't think that's going to be it. There's got to be something that fits better. It's not a fixed asset. It's not AR at all. It's not income. It's other expense. When all else fails and you don't know where to record it at, let's look in the book. See if it has us a good answer. I want to make sure I get it right. So it's going to tell us to long-term investments, common stock and dividends, bank deposit, investments vendor, add new, equity, common stock, select check, payment as, gotcha. Shareholders in the name box, create, add new from the drop down, choose payee text box, type shareholders in the name, vendor, save, accept the given payment, select retained earnings. So it wants you to record it out of retained earnings, take it out of retained earnings. So we're not really tracking our dividends. Payment of long-term debt. I can't believe we're not going to track the dividends. All right, well, if it doesn't want to track the dividends and pay it right out of retained earnings, we can. So it wants us to pay out dividends. So when you pay out dividends, you want to track what account it's going to. Like, you're going to accumulate dividends. You would think that you'd want to. But instead of doing that, the book's telling us that we just want to take it out of retained earnings. So hopefully we have something in retained earnings. We're using checking account 1 because it is case 1. Our account is going to be retained earnings. So we're going to look for that. Retained earnings, retained earnings, retained earnings right there. And the amount is going to be $500. We should have that much. So using check 1005 on 115, we're going to pay the shareholders $500, and we're going to record this account as retained earnings. So let's save and new. Now I'm interested because this should reduce our retained earnings amount. And we're going to double check that whenever we get to the reporting side. Number 7 says record a deposit of funds from a new notes payable signed on 1/16 of 18. Record a deposit of funds from new notes payable with the Bank of California, a new vendor, in the amount of $65,000. So if we're going to record a deposit, we don't need to be in the checks. We need to go to Create, Bank Deposits. It's going to be checking 1. The date is going to be 1/16 of 18. 1/16 of 18. And it's going to be additional funds to deposit. And we receive from Bank of CA, which is a new vendor. Drop down, add new, Bank of CA. It's not a customer, it's a vendor. Save. New vendor in the amount of $65,000. The account, record the deposit of funds from a new notes payable. So, I mean, there's 2 ways to do this. You can just create a new notes payable with an initial balance, right? And that's going to affect your opening of equity. Receive from, because this is a notes payable, I want to put notes payable in here. This is a new note payable. So we have notes payable for case 1, case 2, and case 3. I wish it was more clear if it told us that we wanted to create a new notes payable. It does say new notes payable though. Notes payable. So I'm going to do this way. Add new. Notes payable would be a long-term liability. Notes payable. I got to call this notes payable 1-1. That's what I'm calling it, so I know. You call it what you want it to call. There's no balance yet because I'm just creating this account. So I'm going to save and close. And notes payable 1 is the account. My amount 65,000. Checking account 1 is where the money is being deposited at, and the date's 1/6/2018. So I'm going to do save and new. All right, number 8 says record the payment to Rabobank, a new vendor, to retire an existing notes payable on 1/16 of $60,000 with interest of $600 using check 1006. So, do we have a notes payable for $60,000? That's the first thing I want to know. I thought we do, but I thought that was for case 2. So I'm going to go to my accounts, or shoot, accounting, chart of accounts. I'm going to look for my notes payable. We have one for $65,000 that we just created. We have one for $60,000. So this $60,000 is our original case 1 notes payable that we created. So this is the one we're going to be retiring. I just want to check and double check. So I'm going to go to create, check, on 1/16 of 18, 1/16 of 18. The payee is a new vendor, right? A new vendor is Rabobank. So I'm going to go to add new, RABO Bank is a vendor, save. Checking account 1, new vendor, Rabobank, account. So this is the payment. The account that I'm going to be paying is our notes payable. And it's just going to be notes payable because that's for the case 1. And that amount is $6,000 or $60,000. Now it says it also paid $600 in interest. So my second account is going to be interest expense right there for $600. All right. So now I'm recording this check for check number 1006 on 1/16 of 18 for $60,600. Save and new. It recorded that check. All right, number 9 says record the purchase of an additional computer on 1/17 of 18 from Office Depot in exchange for a notes payable of $1,800. Record the sale of a purchase. So what this is really doing is you're going to be paying on account. So record the sale, and it's really a bill. Now there's a couple ways I can record this purchase. I can go to bills and create a bill for it and do it through there. I can do it through the journal entry. Let's see how the book tells you to do it. It wants you to do a journal entry. So it's going to be create a journal entry. And the date for this transaction is 1/17 of 18. 1/17 of 18. The account is going to be computer of additional computer. So that means it makes me think that we did a computer in the past. Did we create anything for the computers? Yeah, we added a new computer to Office Depot. So Office Depot is already the vendor. So the account that I want to do, and it's under equipment original cost. So this is the one for case 1 that we created. So I want to go to furniture or machinery and equipment for case 1. Right here it is, original cost. I want to click on that original cost. And because I know that I'm going to be crediting my notes payable because it's a liability, I'm going to be debiting this asset because I'm increasing the asset. And the cost of this computer is $1,800. So I'm going to debit that. My next account is notes payable. Notes payable. It's a new notes payable. Because it's a new notes payable, I need to create new. Long-term liability, notes payable. I'm going to have to call this 1-2. Keep all these separate. Save and close. $1,800. I should be good to save. So I have a new notes payable for that $1,800. Now, on number transaction 3, did we do notes payable? Nope, we did a check. This is a notes payable, so we did it right. There was nothing to add it to. All right, so number 10 says open your previously customized report, name trial balance, and start doing your reporting. So once I'm here, I'm ready to look at my transaction details and stuff like that. Balance sheets, not balance sheets, trial balances. So I'm going to go to reporting, and I'm going to look up my case 1 trial balance and see where we're at. So some things that wasn't on here before is interest expense. Expense maintains a debit account, a debit balance. So this is why it's on the debit side. Rent or lease is an expense. It maintains a debit. Travel, a debit. Utilities expense, a debit. Cost of goods sold, a debit. What else are the new accounts? Right here, notes payable. Both of these should be credits. This one replaced the $60,000 one, and this one is the new one for the computer equipment. Machinery and equipment case 1, this is new. And this should have 2 transactions in it if I'm not mistaken. I'll click on it. Yep, I have the original one for $1,375, and then I have the journal entry for $1,800. Go back to my report summary. Checking account, account balance. Looks good to me. Let's see what the book says. The book says my balance should be $114,575. Now remember, case 1 is the only one that the balance sheet's going to be right on. Everything else, the balance sheet's off. So I'm just checking my numbers and see if I'm close. I might be off with taxes or something like that. 40,000, 317, 40,000. Equipment original cost is where this is. And so mine's called machinery and equipment for original cost. And that's just a difference in what I named it. It didn't tell us specifically to change it to equipment. Or maybe it did, but that doesn't matter. As long as you have the one for case 1 that you needed to create, that's really what matters. So whether you just call this equipment or you called it equipment case 1 or machinery and equipment case 1, as long as it's under original cost, that's what's going to be important. Your investments is over here. Everything looks pretty spot on. The notes payable, $66,800. Now, it's not $66,800 because I did a second new notes payable right here for it. And again, they're both notes payable, so whenever I go to grade this, I'm adding them all up anyways to see that I have the right amount. I separated them because it said a new notes payable, so I created a new notes payable account. But you could easily put them in the same one, or you could put them all in notes payable. But I didn't. We paid off notes payable, so that's why it has a 0 balance here. In the trial balance in your book, it just has 1 account for notes payable, so it used the same notes payable even though it told you to create new ones each time. It used the same ones. So it's being a hypocrite. But we get to common stock, 21,000. Makes sense. Retained earnings, 5,000. And sales, service. Yeah, we're good to go. The only 2 inconsistencies with the book right now is the fact that I named this furniture and fixture or machinery and equipment case 1 to do my computers with, and they named theirs just equipment. and I have notes payable at created notes payable accounts where it said to create them, and I named them 1-1 and 1-2 because I didn't want to make sure that I know that they're for case 1, and I paid off my original one that's for case 1, and they just use the same notes payable account for everything. Those are the big differences. So we're good to do a export to PDF, save to PDF, and because that one's right, I have a like 95% chance when I go back to my report list and pull my transaction detail by account for case 1 that this is right. The only differences I might have from you, and that's based on if you created new accounts for notes payable or not, is how many notes payable accounts you have on here. So maybe you have 2 notes payable, maybe you have 3, maybe you have 1. So I have this for total notes payable and 0 because that's where I paid my original one with Rabobank. Then I have this one that I created for $65,000, and then I have one I created for the computers for $1,800. So I have 3. You might have 1. You might have 2. They all get added up at the end of the day whenever we go to grade it, and that's it. So this looks good to me. I'm going to export the PDF, and I didn't spend time on the first one, so I'll spend time on this one, and then go back to the first one, maximize it. So this is what it looks like. Your transaction detail by account for case 1, and I didn't change this. I got to change the name because it is a different report, right? I saved the report and I didn't change the name this time. But this is what it looks like. If you need to, you can pause the video to get your totals for each of these accounts. All right. This one is the balance sheet or trial balance. And remember, this is for case 1. All right, guys. So that wraps up case 1. If you guys have any questions, don't hesitate to reach out to me. And I'll be starting the video for case 2 here shortly.